Hello, everyone. I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to provide you with the April market report for the Greater Toronto Area. There's no surprises in what transpired in April. If you've been following the monthly reports that I had been putting out, you'll know that we sort of anticipated that with rising interest rates, we would see an impact on the market, and that has in fact materialized in April. We had rising interest rates, we've had inflation, we've had the war in the Ukraine. All of those have had an impact on the market. So there are some press releases that are talking about the market having changed and the market having gotten softer and perhaps more affordable, but then none of that is actually the case. Clearly, interest rates have impacted the market. Currently, interest rates are approximately 4.19%. Only 2 months ago, you could get a 5-year fixed rate mortgage for 2.79%. So we've had like a 50% increase in the cost of borrowing. So if you add the increase in the interest rate to the stress tests, a lot of people that were in the market, particularly on the first-time buyers side, some of those people have been eliminated from the market as a result of the higher borrowing costs and the higher qualifying requirements. People who can still qualify are probably looking at lower priced properties because their expectations have to be slightly reduced. Having said all that, there were over 8,000 sales that took place in the month of April. In addition to that, the average sale price came in at about $1,250,000. So clearly, there's been no impact on affordability. It's still very expensive to buy a property in the Greater Toronto Area, and all types of properties are very expensive to buy in the Greater Toronto Area, and I'll demonstrate that when I speak about condominium apartments in a moment. The litmus test for whether or not a marketplace is robust and buoyant are primarily two. One is how many days do properties spend on market, and two, what do properties sell for in relation to their list price. And in both of those tests, we find that all properties, those 8,000 plus properties that I just mentioned a few moments ago, sold during the month of April on average in approximately 10 days. 11 days in some cases. However, in some other areas, depending on type and depending on location, sales were taking place as quick as 7 and 8 days before a property came to the market and was reported sold. So very, very rapid sale pace. That is a clear indication the market is very strong. In addition to that, the average sale price of all those 8,000 plus properties that sold came in at about 106 to 107% of the asking price. Again, that's an indication that people are prepared to pay for the properties that they want. They're prepared to compete for the properties that they want. What we're seeing, though, is that there are fewer people in the market, again, because of those interest rates and the stress testing that has taken a large portion of the buying community out of the market. That's going to continue in place going forward because interest rates are going to continue to go up. So each time the interest rates go up, some segment of the buying public is going to have to drop out, which means we're going to see fewer people competing for properties than we've ever seen before. That doesn't mean that the market is not robust, and it doesn't mean that it isn't strong. It's just going into a hiatus period that, if compared to what we were doing in 2021, is always going to have a negative variance, and it's going to appear, if not analyzed properly, as if in fact it was a weaker market. But just to demonstrate how strong the market is, I wanted to bring to your attention what has happened in the case of the condominium market, which makes up a fairly sizable component of the overall market. There were about 3,000 properties, condominium apartments that sold during the month of April. If you look at their average sale price, you'll see that they have risen exponentially and stayed strong through the month of April. For example, in the case of the central core, condominium apartments were coming in at an average sale price of close to $900,000. And if you think that properties are selling for a little bit more than $1,000 per square foot, that means the average price property is going to get you, in the condominium world, less than 800 square feet. Extremely strong market. And we're going to see more of that as we go forward because the demand is still there. And it has to be remembered that inventory levels haven't exponentially increased. Inventory levels are still historically low. So yes, the market has changed, but it hasn't changed in a way that makes it weak, that makes it less robust than it was. It's just a very different market that's going to operate in a different way, particularly as we make our way through this inflationary period with rising interest rates. So I look forward to giving you your market report for May. Don't anticipate many changes. It should be reflective of what we have seen in April, but at the same time, it shouldn't be misinterpreted as being suddenly more affordable and in any way less robust than it has been in the past. Thank you very much. Till next time, stay well, stay safe.